Welcome to TradersPost office hours for October 11th, 2024. Always a pleasure to be here. My name is Tom Hartman, working for the marketing team here at TradersPost, and I'm here as ever with Mike Christensen, CSO, and CEO John Wage. How's it going?
Doing well, Tom. How are you doing this week?
I have been elbow deep in AI stuff. It's just been, I guess I just didn't realize that I wasn't using. I wasn't using AI to the best of my abilities.
It's
So I was
crazy
like,
how many different ways you can use it. I mean, like I was telling you earlier, it's the applications are endless. But tell me what you've been working on this week.
So I've been I was scratching my head. You know how it is with new tools or what have you. When I was trying to build something that I needed to build, I couldn't build it properly, and then I just said to myself, just give myself a night, build something completely out of the blue, like that I don't need for retail trading at all. And then I learned everything that I need to learn in order to build a different app. And so what I'm hoping to go through later on in office hours is essentially building up a very crude and simple dashboard that will go through, look at news items, recent news items online, and then use AI in order to generate a sentiment analysis, and then trade futures contracts on the major indices accordingly. So we'll see how that goes. And it should be fun. But my God, it was so much fun to try and do. Yeah. John, you've been using Cursor AI, right? Because you're the one who introduced me to it. Are you using it regularly?
Yeah, my daily driver. I switched entirely to. I was using VS Code, so it was an easy switch. But I guess it's been about a year now. But I just switched to VS Code from Sublime Text about a year ago.
Here.
Yeah, which is funny to think about because you were on Sublime for so long. I've been on VS Code for like almost a decade now. And John gave VS Code a run for about a year before he was like, oh no, Cursor AI is way better. Had to convince me. The only reason I didn't use Cursor AI is because it didn't have good WSL2 support on Windows. So I could actually run a Linux environment, which is of course the only like true way to, develop in a proper way on a Windows environment. And then they fixed it like a month and a half ago or 2 months ago. And now Cursor is my daily driver as well.
Yeah, before Sublime Text, I used TextMate. I don't know if you guys ever heard of that one.
Text Notepad, is that what you're using?
No, TextMate. It was like a Mac only app that was like super popular for like, 2000s and 2010. And then I switched to Sublime Text, and I couldn't ever get off of Sublime Text because Sublime Text was just so fast. And I like just plain bare bones editors. And tried several other editors that are like fully featured, but they're just so slow. I just can't stand when the mouse and clicks and the keyboard reaction is just so slow.
Yeah, that's what I hated about Eclipse. Eclipse is a giant, terrible IDE written in Java. And prior to that, though, and this will age me, I was on Dreamweaver. And I used Dreamweaver for a long time.
What about before that? Even before Dreamweaver, I was on HomeSite. I don't know if you guys remember that.
Oh no,
one.
I didn't use.
I started with Dreamweaver. Yeah,
I started with the Notepad. I would literally edit things manually.
And HomeSite was acquired by Macromedia, if I remember right, and then they kind of sunset it, and then it just got incorporated into Macromedia Dreamweaver. Jonathan DS19 asked, did you pay for Sublime? I did pay for Sublime. I mean, the value you get is so cheap. Totally makes sense to pay for it.
Oh yeah, that was one of my number one purchases, and then there was like no reason not to do that. I tried Atom for a while. That wasn't.
I tried that one too.
Yeah, I heard Atom. Yeah.
And that one crazy was written by the CEO of GitHub before the Microsoft acquisition, which I thought.
I didn't know that.
So cool.
Interesting.
The CEO and founder of GitHub was responsible for Atom. Yep.
Well, Cursor, what's great about it and why I want to show it on the show is that with a rudimentary knowledge of AI, and frankly, even if you don't know anything about coding, you can actually get crazy things done as long as you're okay with the fly bumping against the window until it finds the exit. If you're willing to do that, it'll actually explain to you what you don't understand so that you actually go and look it up, which has always been the shortcoming to me. I don't want to sit around reading a bunch of docs because if I try the initial version of an app and within 10 minutes I don't have something that makes me feel ooh, I'm gone. I'm gonna look at the keys jingling somewhere else. But Cursor is keys jingling everywhere. It's fantastic.
I feel like with Cursor, and I'm also using v0.dev just every day. The thing is unbelievable. I mean,
Yeah.
I used to have to like get advice from designers and stuff, and like now I just have an AI tool that I can bounce ideas off with, and it's never perfect, but like you're not really looking for like the perfect design. You're looking more for like the inspiration, and it's kind of like almost back of the napkin crayon level drawing of it, but it's enough to get an idea of like how the elements should be placed and all the high level details. And then I go and implement it with Tailwind CSS. It's been total game changer.
Yeah, I love it. I'm also finding that we can improve a lot of how we use AI with more contextual information. So like I've been feeding a lot more of Cursor AI context that it doesn't even have in the source code by just bringing in more markdown files that explain how things work. And that helps a lot too. Bringing that context in is obviously key. In fact, there was an article recently that was talking about the acquisition of case law by Thomson Reuters and why they paid $650 million for this technology. And the big part of it is that case law had figured out how to reduce the number of hallucinations down to 0. And the key to the work that they did there was that they had basically what I would consider AI unit tests, all these evaluations that were made on each of the responses to make sure that the response was accurate. And it just got me thinking a lot about how we can sort of fine tune our AI environments. Context matters a great deal, and you really want to push it through a lot of tests to make sure that how it responds is accurate.
Yeah, I wish we had a way. How did you do that, Tom? How did you reply? Did you log into Twitch to reply to that?
No, you're in as a guest, so you don't have access to the interface.
Yeah. Okay. Yeah, I got to fix that because I was like, I want to reply to his question. But yeah, it's v0, the number 0.dev.
Yep.
And it's created by Vercel. If you know Vercel, they're also a really pretty sweet company. And they created, it's like a side quest within their startup. They created v0.dev.
That's cool. That's cool. Aventura, good to see you again. He's giving you a shout out here on your new setup, John. We've been working pretty hard on like angling John's camera correctly. We've got it set up where his room looks real nice now in the new house.
Yep.
Yeah.
Yep.
That we have them above the lower thirds is pretty good too. That's a pretty good
instead of all the way down here.
I'm trying to sit up straight instead of my gangster lean.
Well, shall we kick off the questions today?
Yeah, but before, we'll end on that actually. So the first question that we have for this week comes from someone was asking if how do we avoid mistakes with the prop firm trading? And frankly, I put this in here because we had a very, fun for me, not so fun for Mike, experience with prop firm trading that I wanted to bring up here. But just to set context, Mike's been on his Twitter basically chronicling his experience with prop firm trading. And so what was great for me is that like I had blown out my account 2 weeks ago. And then I just felt like very lonely because Mike is always more successful than I am. And so, I just
don't even start with that, Tom.
And so, but I wanted you to give us a chance just to, since the thread is done right now, right? I guess you're going to start a new one.
Yeah, I'll start a new one. Yeah,
a postmortem on it.
Yeah, sure. I think the big takeaway was it kind of wasn't surprising, right? Your risk parameters are really tight. And I think that this is a common complaint of people who do prop firm trading is that you really don't have a lot of room for error. And I made a pretty critical error on day 4. Just wasn't paying attention, had the NQ chart open, even though I had set out to only trade M and Q so that I could keep my control tight. I could scale in and out. I was only trading 2 to 3 contracts at a time. I end up opening a single NQ contract, put the take profit and stop loss on, wasn't even looking at the symbol on the chart, walked away, came back, and I hit my $1,000 daily loss limit. And I'm like, wait a minute, how did that happen? Oh my God, I'm trading the wrong symbol. So it was a really dumb mistake, and one that you get too comfortable in the charts sometimes. You're just not paying attention. I just opened the chart on the wrong symbol. So This time around, I want to try a little bit different of approach. Obviously, the ability to link it up to TradersPost is a really big deal. So now I've got the ability to kind of like set up an actual strategy, one that I know is on a little bit longer of a time horizon. I'm gonna be trading 3 different less correlated symbols as well. So my aim is to actually trade the Euro futures, the gold, and then M&Q as well. And that diversification across those 3 assets and basically allowing all 3 to trade over a little bit longer of a time horizon, I think is going to help quite a bit, because then I'm trading a little bit differently than I think a lot of people will trade prop firm accounts. They tend to choose like one symbol and they're kind of in and out of trades. And I want to try it a little bit differently. So I'm kind of working on a strategy right now that stays within the confines of the rules, which are like, you have to close everything out by 3:15, and you can reopen during the electronic hours, which gives you this kind of wide window to hold a position, but you still have to close and reopen every single day. So
you were trading it manually on the first attempt?
Yeah, just first attempt here. I wanted to try it on a discretionary basis, just sort of run through the experience of what it's like for a lot of prop firm traders. And I think obviously that one mistake made on day 4 was unrecoverable. There was just no room left to make any mistakes and to have any kind of drawdown.
So is the second attempt going to be automated?
The second attempt will be automated. Yeah, this will
that was my favorite part.
Did you blow up your first account on purpose just so you had good content? We'll go with that.
Shh, don't tell anybody that. No, that's not what happened.
I love the whole user error problem. I know we've talked about it several times as far as a benefit for automated trading, but you can just imagine how many times someone has done something like that for their account because they were manually trading and they didn't have an automated process. Mm-hmm. The automated process sets you up in such a way that you have to check every link in this chain before you're executed. So by the time you run the real thing, you're not worried that this sort of thing will happen. You have other problems to deal with, but they're not those types of issues.
Right.
And it was such the look on your face when you talked about it this week of, had I just automated it with a TradersPost, I would never have made this mistake.
I wouldn't have made the mistake of trading NQ. I know that.
I've always mentioned the PEBCAC. You ever heard that? I think I've mentioned it on the show, actually. It stands for problem exists between keyboard and chair. Yeah, when anyone ever is like, this isn't working, the thing's broken. No, PEBCAC.
Excellent. Well, I guess you'll start a new thread. Hopefully, I was really loving the one you had so far, and that one will end failure. But then the next one will be success, and it'll be a nice hero's journey for you.
Or it won't be, but we'll still learn a few things about how to automate this stuff. That's kind of the aim here. And I think the bigger play here is if all of this looks good, the idea is to scale this out to multiple funded accounts at the same time. So, if any one approach is working, the only real way to scale prop accounts is to open multiple funded accounts. And I know there's a lot of people out there that are attempting that kind of thing. So being able to do that through TradersPost, I think, is a really big deal.
Message here from John. I know someone who was manual trading and accidentally left an order on a loss 10 funded accounts.
Yikes. I mean, so,
what was your cost, Mike? That cost to open the account?
Yeah. And that's actually what I wanted to bring up. The risk reward proposition on this is really different than trading itself, right? Like if I had opened a $50,000 futures account, I'd be down a couple $1,000s here. I hit my loss limit. I'm done. But that would be a $2,000 cost on my part, right? If it was just my own capital. But because I was opening an eval account through TopStep, my only cost is $49 for a $50,000 account. So I risked $49 for the chance of getting evaluated as a trader, and I lost this time around. And that's okay. I'll go back and give it another try. I'll try a different attempt. I'm now going to use the practice account to test out this automated strategy. We'll see how that plays out. But the real risk that was put on the line was that $49. So right now my expectancy is 49. As I move my way into the next account here, what you'll have the choice of is different price tiers with each of these prop firms. Usually it's like $100 or $150, and you get certain amount of capital with a certain amount of drawdown available in each account. And the risk reward proposition is that fixed cost of the account, but then I have the potential of making some percentage, some proportional amount of the profits generated in the account once I reach the profit target for that account. And that's obviously a pretty good asymmetric setup, right? Like as long as you're following the rules properly and you have something that's working consistently enough, then you're taking a lot less risk overall than if you expose yourself to a futures account directly. And I find that pretty fascinating.
Absolutely. Excellent. So I wanted to, so let's move on to the next questions here. For last week, we had someone ask, what is the likelihood of having brokers outside of the US integrated into TradersPost?
I think highly likely. It's just a matter of when. And I don't have an answer to when, but for sure, I think it will definitely happen.
I mean, it's fair to say that we are supporting global crypto exchanges, Bybit, Kraken. We've got Coinbase on here. We got Binance as well. So that's sort of our current exposure to the global market. But we do want to look into some of the other global providers as well. I know Pepperstone's pretty high on the list in terms of user votes. But if you do have a specific broker that you're interested in, just hit us up on support@traderspost.io or check out our connections page on the homepage and add yourself to the wait list for any broker you see on that list.
Yeah. Do not underestimate the power of your suggestions. John and Mike really very much pay attention to it.
Yeah, we do rank our broker integrations by the number of people on wait lists. So it really does make a difference.
Yeah, and not by exclamation points in your support tickets.
Or how much the brokers pay us.
So far, we're at zero.
Zero. We get paid zero.
All right. So next up, someone's asking a security question. They were asking if there's any safety concerns using an API's private keys versus OAuth.
It's definitely better to have OAuth, and this might be related to the Binance integration that we just launched last weekend. Binance does have OAuth, but it seems like it's something that they just added recently. And in the documentation for OAuth, it says that it's like being reserved for, I think they called it like top partners or something. I don't think we're a top partner, but I applied, filled out all the information. They have like a whole like KYC, know your customer, except for I think they called it KYB, know your business or something like that. So we filled out all that, and I hope that we'll get approved. But generally, yes, OAuth is much more secure. It basically allows you to connect your account to TradersPost without inputting your username or password on the TradersPost side. But even if we like for Tasty Trade, for example, they don't have, or they didn't have OAuth, and they have a way to get a key, a token from your username or password. But that when you input the username or password, it doesn't pass through the TradersPost servers. It goes directly from your browser, from the client to Tasty Trade, and Tasty Trade responds with a token, and then we pass that token through to our server and store it. And in the case of Binance, if you generate an API key and then you input the private key, the secret, and the token into TradersPost, we will store it and we encrypt it. But you still have the ability to delete that API key on the Binance side, which would invalidate it. So you still have the same controls. Like if you just want to, you lost your login to TradersPost, you don't want to like try to log in to delete it from TradersPost, you can just invalidate it on the Binance side. So generally, I would say yes, OAuth is much more secure, but sometimes particularly crypto exchanges, they don't give OAuth, and the only way to integrate is by copying and pasting those keys into TradersPost.
Right. Okay. Makes sense. All right. So here someone's asking a question about the settings in TradersPost. And actually this came up a couple of times this week. So under what circumstances would a user use the subtract exit quantity from signal setting? Is there a specific use case you have in mind for this, or several?
Yeah, that was added for TradingView specifically. Imagine you're long 5 shares of Apple and you want to go short 10 shares of Apple. Well, if you send one signal with a quantity of 15, you need to be able to subtract that 5 from the 15, so you end up with 10 to enter on the other side. That's really the main scenario. And TradingView strategies have the ability to basically swap sides with one order, and the quantity in the order is both the quantity to exit the open position and to enter on the other side.
I see.
So TradingView is going to send the full quantity as one alert to us, and we need to know that part of this quantity is for exiting and the other is for entering on the other side. And the one important thing to note about that behavior is that if the quantities in your strategy settings on TradingView are out of sync with the quantity you have in your broker, then you could have issues. So like in that example of, say, you're long 5 shares of Apple, well, if you exit 3 of those shares, now you only have 2 in the broker, but on TradingView and the strategy, it still thinks you have 5. So it's still going to send 15, and it would use 2 of the 15 to exit the long, and then you'd be short 13 instead of 10. So like that's really the only concern when using that feature.
Okay, makes sense. This came up, I think on Discord. Someone was asking, how could I set up my strategy so that entries are submitted automatically, but exits need to be manually approved?
Yeah, we don't have this capability, but I definitely want to add it. I think it'd be cool to allow you to control it in the strategy settings, but also the ability to send auto submit in the webhook so that you can override the settings in the strategy. That would be pretty cool.
That makes sense. But otherwise, I think you can do this with 2 separate strategies.
You could do that. Yeah, you could do that. You'd have the one strategy, 2 subscriptions.
That's what people are doing now.
One would be auto submit, the other would be manually approved. And so you'd send your entries to the first strategy subscription and your exits to the other.
I guess it would have to be 2 separate strategies and 2 separate webhooks. Yeah, it would work that way. Yep.
Right. So the what would happen is in that second subscription, you just turn off auto submit, and then when your exits come through, you would manually approve them within our interface.
Yeah, that makes sense.
And then finally here, it's a general question. What are some of the most interesting setups or use cases you've seen for TradersPost? I know there's a broader question, but I'm curious about if there's any of those stories, like, around the bar table, of like, hey, can you imagine someone's doing this with TradersPost?
The executing a strategy across multiple prop firm accounts was a new one to me. Like I knew that TradersPost had the capability to execute across multiple accounts, but like most of the people were like, the most common one was like, I have my Roth IRA, I have my wife's Roth, my daughter's, and I want to run the same strategy across all 3 of those accounts. And people can do that with TradersPost. But then when we first started learning about these prop firms, and I discovered customers that had like dozens of these paper accounts, and they were executing the trades across all of the prop firm accounts. And I guess if I remember right, they're doing that because, like Mike said, that's the only way to scale up, because they limit how many contracts you can have in an individual account, which I don't fully understand. Like if they allow you to have multiple accounts, why don't they let you?
Because they collect more revenue per prop firm account.
There you go. That's obvious. That makes total sense. Okay. But they still have limits. Like I think Apex and Top Step, like you can only have like 5 or 10 or something like that.
Yeah, that's right. Yeah, I think Top Step is you're allowed to have 5 at any given time.
So do you think that they limit it just so that if someone is really killing it, they can't take too much money from Top Step?
I mean, yeah, there's going to be an equilibrium here where their ability to pay out on these simulated accounts is sort of limited by the economics of the whole system. So
that's the casino who taps you on the shoulder and says, "Hey, you've won enough."
It's a max bet thing, right? Like you can't make huge bets on the roulette table. So
makes sense. Yeah, Jonathan DS says most of them are paying out of pocket for payouts. If they don't copy your trades, they are paying out of pocket. Yeah, so they're paying out of pocket, but they're using the revenue from the cost to open the accounts. And since 80-85% of people fail, that money is basically being used to do the payouts.
Right.
Hustle asks, if there's any strategies with success, please reach out to Discord.
Well,
I refuse. I'm keeping all my successful strategies to myself. I'm never sharing them with anybody else.
I want to comment on this because I think that this is the reason why, at least in my experience, people don't want to share strategies, because strategies work, just not all the time. So like, you may get a strategy from someone else, but like, how do you know when it stops working? And there's a constant process of like having to change out or tweak which strategies work. And like, if you don't really understand why you're running it, then you won't know when to stop it either. And the people who wrote the strategy don't want to be responsible for telling everyone, hey, strategy A is no longer working. You need to switch to strategy B. So like, even if you find a strategy that works, it's going to stop working, and you're going to have zero ability to know why it stopped working and when to pull the plug on it, because the overarching market conditions changed. It kind of invalidated that strategy.
Yeah. And I think what makes it, again, kind of going back to my point earlier, what makes it more difficult is the risk parameters are so tight that you can't really do what might be successful in any other normal conditions, right? What I mean by that is I've had smaller accounts than $50,000 that I've had more success with because I'm willing to take a larger drawdown than this tight little $2,000, drawdown limit that they have inside the account. And so you not only have to have a strategy that is effective and has an edge and obviously a high expectancy and profit factor, but that drawdown has to be pretty tight too. They're looking for consistency and really tight consistency. It's really tough.
To me, it's the speed running of trading. They got
So
to perfect moves.
A Ventura trader says Apex doesn't allow bots either, which is interesting to me because I know of customers who are using Apex.
Yeah.
And in all of the orders that we send Tradeovate, which is Apex, there's a is automated Boolean flag that we have to send on every order. And it always gets sent as true. So
I think with Apex,
I don't know what the deal is there.
Yeah, this is likely a not allowed, and when they catch you, they might shut down your account. We do want to clarify, like, using TradersPost will work with many of these prop firms, but you need to check with the prop firm to see if your conduct is allowed. I know for sure, like with Top Step, they just don't want you sending lots of trades in succession over seconds. They want you in a position for a little bit longer than that. But there's nothing that I found in their terms that specifically address the whether or not you can use automation. The big thing is they just don't want you to walk away from the screen. And in general, I tend to monitor everything, so there's really no reason why I'm just sitting here and setting it and forgetting it. But yeah, I think I've heard other people say Apex is frowning on that, but I'm also hearing that Apex has more than just that issue. There's issues with payouts, there's issues with accounts getting shut down, so I'm not sure.
I wonder if the issues with payouts,
I don't have an
cash flow issues where it's like, oh, we didn't make enough money off the failures, we can't pay out this week.
Yeah, I don't want to speculate. I'll try Apex as well. Right now, I've only tried Top Step, so I'll have an opinion if I give them a go.
I feel like also they seems like they changed the rules too, which is like they're not making enough money, or they're paying out too much, so they have to restrict it some and make it a little bit harder so that they have enough money. And this is all just speculation. I have no idea, but
yeah, it could be.
That seems like that would be the cause.
Yep. Yeah. I want to say it's funny that the username here is Jonathan DS19, but I want to say Jonet Hands. I know that we've said that before. So yeah, you provided a link here to the Top Step article on whether or not you can use automated strategies, and the Top Step does outline that in their terms, or at least in their article there.
So before we close out office hours, I did want to, my plan was to run through actually developing just a quick dashboard in Cursor AI for how you can send signals to TradersPost for sentiment analysis. But we don't have time for that right now. I'll do a video for that and then post it on the channel. But what I would love to do is to show you the test that I did beforehand.
Sure.
I'll share my screen real quick here. All right, so the idea here was that I wanted a dashboard that essentially I used Cursor AI to create a Next.js app. So I just ask it what to do and then step through and just click on the buttons to run or apply whatever it asks me to run and apply. I find obeying the rules or whatever AI tells me to do is very on brand with the type of person that I am. I take very well to authority, so this works pretty well. So I go through there, and then as it generates the app, I then talk to it and say, "Hey, I need you to do this. I need you to do that." So, for example, as I was going through, this is Cursor AI over here that we're seeing. And I had, if I ever had errors, if I ever wanted to have new features or what have you, I would just tell Cursor AI what I needed it to do. I would tell it either to look through the entire code base or certain files, or I would use the composer to ask it to do certain things, and then it would go through all the different files and fix it accordingly. And because it's locally on my computer, it would update live. And so here on the left side, I have all the latest news, or that I can easily access with an API. The thing is, I didn't know how I could access news items, but the AI. So I asked the system, the AI system, well, how can I access recent news? And it said, oh, well, you can just use I think it was called News API, which I didn't know existed. And it's free. You can get an API key, and then it told me how to set it up. I set it up in my environment variables, and then boom, next thing you know, I have the list here. I told AI how many I wanted to see, that I wanted to be filtered specifically for news items that had to do with these indexes, these indices, and that I wanted a refresh button here in order to pull new news items. Then once that was set up, I wanted to have market sentiment on the right. And so I said, hey, come up with something for market sentiment. There was like all kinds of different versions. I went with this one. And I said, initially, I wanted to figure out a way of myself of figuring out what the sentiment was, until I realized I could just have one AI help my other AI. I said, here's my OpenAI key. Send all the headlines from the news items to OpenAI, have it do a sentiment analysis and send it back to me, and then generate a score accordingly, which it then did. Once that score is then created, I then asked it to add input where it could put the webhook URL in for TradersPost. So for TradersPost, we need, for the strategy, we need to get the webhook URL here to send the signal to, which I did. And then I pasted in and I said, hey, I want to be able to put the JSON payloads automatically. So I gave it in Cursor, you can either do at web and then put a link. In this case, I put a link to the TradersPost doc. Oh, oops. So I can just grab the link for the TradersPost doc for webhook and then toss that into here if I wanted it to reference it, or if I know that I'm going to be referencing it again and again, and I don't want to have to pull that information each time. In Composer, I could go ahead and oh, a second here. Under Notes, I created a note with TradersPost docs, and I just copied and pasted the doc information here, so that when I am talking to the chat, I could always just refer to TradersPost docs, and that way it knows the format and what have you. Is it perfect? No, but it's good enough in order to get me where I need to go. And then and so what I wanted to do was to automatically set the JSON payloads here, and to change the actions according to if it's bullish, bearish, or neutral, and to have different notes. And then here I added a send button. So if I send, let's say, this NQ contract, it'll send over, it'll confirm that it's been sent. And if I go to the TradersPost logs, I'll be able to see that that was just sent in right now.
That's crazy. That's cool.
And these are buttons that I put on the chart just for the sake of our conversation here. But I could easily have asked it to create a cron job or whatever vague terms I want to use to say automatically do this once a day, so that at the beginning of the day or the beginning of the trading session, it will then go ahead and open up the contract.
Yeah, so, this is really cool. It kind of makes me wonder if you could, since we're on the subject of market sentiment, I would just crawl the fear and greed index on what is that, on CNN?
What about just look at the moon cycle and just full moon, you go full port, baby.
Go short in extreme greed and go long in extreme fear. Effectively, that sort of counterintuitive approach, but or contrarian approach rather. That's the right word for it. But I mean, even just crawling that page and like setting up the webhook that way, that would work as well. What I'm impressed with a couple of things here. Like one is I think this exemplifies better how diverse you can get with your signal source to send a TradersPost. We're not just limited to TradingView or TrendSpider. I've seen people set up webhooks from spreadsheets, from your new code here in Cursor AI. I've seen it done in Zapier triggers. Like there's a lot of really cool ways. Oh, and this week I just finished up all the work to get webhooks set up properly in MT5, MetaTrader 5. So there's just so many different ways to make your integration work. However you want to automate things, like because it's a webhook, it's really kind of a universal adapter to whatever communication platform you want to use. But I love this use of AI as well. I was going to highlight that when I was working for a subsidiary of S&P Global, I built a whole news API way before AI, and would have wished that I had some of the resources that you just put together there, because I was doing all kinds of stuff the long and hard way, and you built this thing in like a week.
Related to what you built, Tom.
This I built in 2 hours.
Yeah, that just makes me feel sad. I spent 6 months on an API. So
I remember early on in the early days of TradersPost, I remember a customer made like a custom desktop app, and it was a very simple like trading app, like a very like large buy green button and a red sell button, and he would have TradingView up on half the screen and then this other app on the other, and it just made it really simple to basically buy and sell with manual without any other noise.
Yeah.
He had all his configurations preset, so he didn't have to worry about position size or calculating quantities. It just all did it automatically, added the stop losses and take profits, and all he had to worry about was just pressing the button. That was it.
Where's your buy Bitcoin button, by the way?
Yeah, I know I haven't done it yet, but I still think it's a good idea. I want to like hook up. I have this single button. I want to figure out a way to hack that, and I could just like paint on buy another $5 worth of Bitcoin.
Well, now everybody thinks they know who Satoshi Nakamoto is, so we need a little sound clip from him, and he'll just say some sound bite every time you hit it.
What I want to try is to do I have a time tracker on my computer that tracks everything that I do, and I would love to be able to just use this an AI system like this, and I think I probably do that if I'm particularly productive, that it's rewarded by buying a certain amount of Bitcoin or whatever. And I just love the idea of sitting on my computer, and as I'm working, it goes ding, and it purchases some shares of Tesla or whatever, and I get a message that says, "You were so productive today. Here you go. You get 2 shares of Tesla." And when I see it's use cases like that I find the most entertaining for me, that go beyond what people might normally use in TradingView or TrendSpider and stuff like that.
Yeah.
All right. Okay, so that's good for now. We are going to be headed over to After Hours, where we're going to be talking quite a bit about Tesla, S&P at all-time highs, and what's going on in the Treasury bond market. But before we do, just want to let you know, thank you very much for your time. You can stick around. The stream will start in a second. But if you have any questions for next week, you can feel free to post them on YouTube, on Discord, or send us a message in support. So thank you very much. And we'll say goodbye to John for now. And we'll move off to After Hours.
See you later, John. Don't forget to do the things, like and subscribe.
That's right.
See you guys.
Now for After Hours with your hosts, Tom Hartman and Mike Christensen.
So this week, Mike, has been Tesla fantastic. I don't know if you were paying attention to what's going on with the new. Did you get to see the Robot event for Tesla?
I did, and obviously, I think they named it appropriately. It felt a lot like the movie I, Robot. It was scary cool. That's probably the best way I can describe it. Scary cool. But I don't know anybody's going to be coming out of pocket for $30,000 for a personal assistant robot, unless you're at a certain economic income level. However, it was pretty impressive. Like the whole thing was. There were moments where I was like, yeah, I don't know how realistic this is, but I guess that's sort of the fanfare of Tesla events.
Excellent. Well, before we jump into that, let's just go over some of the big headlines for the week. We're starting off with Tesla shares dropping 7% after Cybercab Robotaxi reveals fails to impress, which I thought was, hey, that's a little bit much, but that was all over the financial news. Next up, we have that at the same event, Tesla unveils Optimus, which for some reason was its own separate headlines. People were talking about Optimus in a completely different way. I guess because it was like a surprise reveal. After that, we were talking about S&P 500 that hit a new all-time high. We broke 5,800 on the S&P, so that was pretty cool. And then finally, we do have some issues that look like it's cropping up within the bond market that I will love to touch upon. And so those will be our headlines for this week, and those are the big things that happened over the last 7 days. So, starting off with the Tesla Robotaxi. So, I love when I hear news that I find to be good met with severe drop in the stock, because to me, there's nothing more bullish than that, or there's no more buying the dip than that, right? We have to agree that if you agree that automated driving, autonomous driving is going to be a thing, and that nothing's going to stop Elon or whatever or Lex Luthor from putting it out on the streets, well then why wouldn't you buy it to Tesla at 7% down? That's exactly what I'm planning on doing. And so when you see a drop like that, 70% drop in Tesla on this type of news, is that to you a buying opportunity, or do you go, analysts know more than me, than what I might know, maybe I should stay on the sidelines?
Yeah, that's a tougher one for me. I'm interested. I get very interested when prices drop pretty dramatically, but only if it's a value buy. I'm interested in the difference between price and value, and that's because most of my early background as an investor was really understanding value investing, how to value companies, discounted cash flow, dividend cash flow analysis. Really what I'm looking for is, can this company grow their earnings into the future, and are we currently paying a better price than it's worth? Tesla is one of those overvalued companies still that makes it difficult for me to know whether or not I'm in a good buying territory. But from a technical perspective, it still looks pretty good. I think there's still room for a continued drawdown from here, though. I mean, that last bounce off of 185 was pretty impressive. That was obviously a fantastic buying area, and if you had taken that position at that point, then you went for a 45% run. There are plenty of opportunities like that in Tesla, and it makes it a very attractive, sort of short-term swing trade, just because of how volatile it is. So I'd probably take it for more of a short-term ride.
When are we going to get to the point where there's a meme asset that you just can't resist buying? I'm looking for the thing that's like, okay, you're like, I'm being unreasonable, but I'm going full bore on this. Has that ever happened?
No, I'm like, maybe I'm just like programmed too hard to like wait for these great value buys. Netflix, when it drew down significantly in 2022, that was a really good one. And that was really kind of on the news of them going to sort of an ad-free model, or excuse me, an ad-based model, and they were going to cut the ability for people to share accounts. I felt like the news was overblown, and there was this really nice big drawdown in their price that led into a good buying opportunity. But again, it's like the main thing I'm looking for is, what are the fundamentals telling me? It's hard for me to get on board with the growth story and the narrative into the future if you're already paying such a hefty price for the company. And maybe part of this is, I learned the lesson the hard way about buying something for more than it's actually worth in 2004 when I bought my first house. And by 2008, not only did I pay a premium for my house in 2004, but then the value of it tanked from the 2008 GFC. That now I'm realizing I'm upside down in equity now. This makes no sense. I'm now sitting on this, house that I overpaid for, And so I kind of made this promise to myself a long time ago that I wouldn't buy things for more than they're really worth. So that's just me. My personal preference is to wait for big buying opportunities for things that are cheaper than they're actually worth, or at least at what they're worth, you know?
It's hard because it's the I feel like I've grown up in crypto when it comes to the trading, and the model there is buy high, sell higher, right? There's no there's no there's no wait for the big retrace in Bitcoin. That's not the message that's being produced. It's the
See,
have
Tom,
fun, staying
I
poor.
had that experience though. I did the buy Bitcoin at night. I think I bought Bitcoin at 19,500 in 2017, right before it hit the $20,000 mark, and then reversed and made a 70% decline after that point. I didn't hold on to it for very long, but I think the point is, like, I bought tops before and I'm not happy with it.
I see. To me, it's like this. It feels like I don't know. Because I'm such a contrarian, I'm always buying when there's some big drop. Like I'm never like waiting for the confirmation. I'm like, if it's fallen, let me buy. If it's fallen, let me buy more. And so to me, I feel the most excited when it's down. In fact, I feel the most nervous when it's going up, because then I go, well, should I sell? That's the part I cannot stand. But if I buy it while it's falling, I go, well, I know what I'm doing. I know that I'm catching a falling knife, and if it cuts me, like I get it. That's what fallen knives do. It's such a different thing. But I feel like I want to hit on. I'm going to get to the story. I don't know if it's going to be uranium. I don't know if it's going to be oil. I don't know if it's going to be something where we talk about it, and you're like, oh my god, I got to buy that right away. I got to be on that train. I don't know if it's going to be NFTs. I don't know what's going to be the thing that...
I'll let you know what it is when it happens. I'll get excited about something. And maybe one thing I'm looking at right now is what I believe is a burgeoning industry of GLP-1 drugs. And so like Eli Lilly is pretty interesting. Like I'm looking at some of the participants in that industry as a potential play, because I think that's going to grow dramatically. We have, a pretty big obesity epidemic in the United States. And I think that if it's more accessible to a larger audience, that more and more people will participate. I don't think there's any end in sight in terms of how many end users end up on a product like that.
So when it comes to Tesla, buying Elon is not a thing that's like a driver for you. It's specifically the value prop of the actual underlying.
Yeah, the fundamentals are the bigger play in my mind. If I can make sense about the growth trajectory, then I can get on board. But like many times, it's that relationship between narrative and numbers that is really, really important. And sometimes there's just too much narrative and not enough numbers. And sometimes on the flip side, I'll spend too much time in the numbers and not put enough narrative to it. So I've been guilty of both sides of that. But I just think that Tesla is largely kind of a big narrative story. And sometimes the numbers just don't make sense to me.
And it's not painful to you if you miss a big run, like the big run. And then I said, okay.
No, I mean, I'm happy with my performance. I tend to average 25 to 30% a year. I think I'm doing okay.
All right. You're speaking as someone who has a happy marriage, happy kids, and comfortable with their own lives. That's the problem. All right. So I wanted to move off to actually the cyber cab story was not nearly as interesting to me as the Optimus story for Tesla, because we don't really have the dystopian future of the automated cars, but we do with the anthropomorphized robots. And watching these robots serve drinks, come up with jokes on their own, people inherently treating it like a sentient human being, or like they wanted it to be a sentient human being, to me feels like the montage of the Apocalypse movie. And I wanted it. Like, I wanted it to continue. Like, I'm not there saying, let's slow this down. I watch the robots walk around and I go, yeah, I need 2 of those things. And where can I sign up on layaway to get one of these robots? You said you watched or that you at least saw the coverage of the Robot event. Did the Optimus robot itself hit you in any particular way?
Yeah, I thought it's cool. I mean, it immediately reminded me of the Will Smith movie iRobot, and that was the whole point. I know that was part of the theme. They kind of played into that with the We Robot theme. It's very Isaac Asimov. It's very science fiction, but it's now reality, or science nonfiction, if you will. That's awesome. I mean, it's a very cool idea. And obviously, in certain types of environments, this really can make a difference in people's lives. But my mind goes to the dangers of it pretty quickly. I start thinking of the lessons that were made in that movie and what happens when you give robots autonomy and things like that. But I think the other part of it was just from a practical sense. What are you going to use this for that makes the cost worth it? Like, that was the more interesting question in my mind. Why would I purchase something like this? I think I would probably sooner lease it. I could see labor applications at home. Maybe you have a project you're working on at home, some kind of, construction work, or you're remodeling a room, or maybe you just want to repaint a room. I'd rather lease one of these than own one outright for all these daily tasks that are better completed by all of the members of my house, right? Like I didn't see an immediate need that could justify the cost. What are your thoughts?
It's so funny because I don't really, even though I have the idea of, I like to have my own robot, that's just really a novelty thing.
Right.
To me, it's more about the deflationary effects of these robots within the labor force. And there is that whole thing of, the beginning of the industrialized revolution caused the displacement and poverty on a scale that we hadn't seen before.
Right.
But those are birthing pains to a new world. And I don't know really anybody, myself included, who says, hey, we should go back to an 80% agrarian lifestyle, right? So we seem to be okay with this progress forward. And so my big concern has been, especially for the last few years, the population decline. In Canada, it's the same as the United States. There's just not enough kids being born to replace the adults, like at the rate that we want it to be. And when we're seeing these sorts of things, the slower growth rate in population in other countries, Singapore, I think, is below 1 at the moment. That's a ticking time bomb for either the culture disappearing within, let's say, 50 years, and the nation perhaps not being able to support itself. Like, you need the children to be productive and there in order to take place. And what was always at the back of my mind, like, do I tell my kids they should leave when they're older and go to a different country? Because I was like, what's going to be here if there's not enough people? Well, the robots help solve that problem. The robots and the AI, it allows for a type of a productivity boost that won't take 20 to 40 years. Like, if it's real, it won't take 20 to 40 years for it to kick in. And then we have the productivity within the labor force that we desperately want, that's infinitely scalable, right?
Well, not infinitely, right?
Well, theoretically, that
Sure.
Well, what do you mean not infinitely? If you have the software and the hardware,
Like, I can imagine that statement applying to the software aspect of this, but we still have the production cost that goes into creating these robots over time. You can scale only so much, only so far as there is supply to actually meet demand, and then some, right? But like the how many people are you really displacing? How many jobs are you displacing in that process? And how many can actually be created to displace those needs? My point is, like, it's not something that can scale forever. Eventually, there's going to be a supply demand problem there.
Would that be imagining that we would need the same amount of material to build the robots as we are doing right now? Because I would imagine that then scales as the robots become more, let's say, stronger or more durable, or what have you. You can use less and less material in order to make it, and they would be able to do more and more and more. And I ultimately envision the point. It's sort of like how landlines were replaced with satellites. All of a sudden, now we had far more range of access for our signals than what the wire across land can do, even though we were accomplishing the same goal of communication. So I just imagine that 50 years from now, well, the fifth generation of this doesn't look anything like a metal robot walking around, that it's some other material. Hell, it could be grown for all we know. But we're not going to want to walk back from the automation, this labor automation. And so the amount of productivity that we can get out of it, I'm assuming, is this trend towards this deflationary effect of increase in productivity. And that should bring down prices for everything dramatically. Like, that to me is so exciting. The idea that we could possibly be on the cusp of a golden age that could last for hundreds of years if we get this right.
Yeah, I think so. I've heard similar arguments made if you had, let's say, like the Star Trek type replicator, right? Where if you could start printing your own food, printing your own materials at home in a way that made it easier to access those resources, or in your example here, you're allowing robots to create more robots using resources that are grown, right? Using some kind of like biometals or bio something, right? I'm not completely well versed in that realm, but let's just say it's some kind of resource that could be renewed in some way. That totally makes sense. The question I have after that, though, is really around cost, because at least the proposed price that they were mentioning is somewhere between $20,000 and $30,000, which means that what you're really doing is replacing what could be done by a human with somebody who costs potentially 33 or 50% less than bringing somebody on staff to be your assistant throughout the day, right? So if you're imagining this world in which costs come down, and that might be true if that labor, of course, is available at a unit economic cost that is significantly lower than the current cost of labor. And so those costs would need to come down quite a bit for that to be possible.
Well, if these robots were coming and there was no need for it, let's say we had a population boom, right? Another baby boomer generation, then I would say I think it's a failure to launch. We're not really going to have the need to meet the technology. But
yeah, you make a good point about the population problem. And I know that's like a serious concern. So like replacing people in the future, the missing people that we need in the labor force with robots is a really interesting concept for sure.
Yeah, so I'm really excited about that, and it actually gave me hope because
that we can solve the population problem with robots.
Exactly.
Yeah, I like it.
It gave me the same sort of hope as when you hear these I forget the field, but in biology, AI generating cures or treatments for chronic diseases and ailments that we didn't have before, right? The AlphaFold with the protein folding, that we can now generate different types of things that we need in order to help our bodies. I'm like, that used to be 200 years away, and now it's like here, right? And so that to me, I just feel like, okay, great power, but the possibilities that are in front of us, it's ours to fail. And I go, well, if we fail, if we blow ourselves off, if we let the AI take us over or whatever it is, fine. Like, it was going to happen. We're not on track to or I accept that as a possibility, as an outcome. But with that comes also the possibility of unbelievable gains, and you can't have one without the other. The whole yin yang thing.
Fair. Yeah. Fascinating to see. As always, Elon is pushing the envelope.
Now, as far as the yin yang, the two sides of the coin, we have the next two stories are essentially the two sides of the same thing. The S&P being at all-time highs, or recently crossed an all-time highs, and the problems of what we're seeing in the Treasury market. Now, I don't want to delve too deep into what are the underlying mechanics of what's going on in the markets, but I just want to point out a few things. So recently we had something I pay attention to are the bond auctions. We have here a bond auction for the 3-year, the 10-year, and the 30-year that happened this week. And you'll notice that the yields on those bonds are higher than they were last time, which means that basically the higher the yield, the more the Treasury market has to solicit buyers. That's why the yields are going up. They have to pay more out to nations, to institutions, to whoever, to bond buyers in order to get them to buy the bonds. And this is a gauge for, it's like inflationary. Those numbers going up means that people feel there's a higher chance that inflation or the interest rates will be higher in the future, and so they don't want to get a lower interest rate now. So it's like nerve-wracking. It's like, okay, well, we were talking about, I think last week, that perhaps we've bottomed in yields. At least that was the case I was making, that we bottomed in yields, and that we might actually head up to higher yields, higher inflation rates than we had during COVID. And this to me is like signs of that rumbling. We add on top of that We add on top of that the idea that the Treasury, the MOVE index, which is essentially the VIX but for bonds, exploded up recently. I don't know if you saw this. The MOVE index just jumped up significantly.
Mm-hmm.
And that's nerve-wracking as well, because that means, I mean, the move index can move up just like the VIX, whether the bond market does really well or it does really poorly. But what it means is that something's happening. And what actually happened was that yields went up, which means it suggests there's a problem with funding somewhere. Somewhere in the financial system, there's problems with the value of collateral and the ability for institutions to fund themselves, which is why we're seeing these stirrings. And that to me gives 2008, gives 2012, gives 2019, and gives 2020. You see these rumblings before major crisis, but here we're seeing it in the bond market. I don't like that. I'm fine with the stock market crashing 50% or 80% and staying that way for 10 years. Fine. We all know how to live with that.
Mm-hmm.
But if the bond market goes down, that's sovereign debt that's now at risk. That's a real big problem.
I found it pretty interesting as well. And it's obviously had a secondary effect or second order effect on the mortgage market as well. I was sharing my overall yield curve chart with you there on treasuries and the Fed funds rate, as well as the current average mortgage in the United States. And obviously this graph is telling this short-term story here of the, sort of midterm yields rising pretty significantly over here, the 1 year, 2 year, 5 year, 3 year. And then of course the shorter term 2 month, 3 month, 1 month yields have remained relatively flat and started to decline as expected, but it's also caused a clip up in the overall average mortgage. We went from, sort of a bottom of 6.09 to 6.32 on average. That surprised me. I expected that as the Fed pulled back by 50 basis points, we'd have a little bit of a lag in the rest of the mortgage market, as well as credit or yields in Treasury yields, but that wasn't the case. To your point, we've seen this big uplift overall in the overall forward curve.
And the news is all like strange about it because, right, the Fed cut 50 basis points because they want, one of the things they want is for mortgage rates to come down. They want to release that pent up demand. So that's not exactly happening the way they're thinking. Plus, they're floating out the idea there that they might not do the next rate cut. I don't know if you saw this. I think Boston came out. President Boston came out and was saying, "Hey, maybe we shouldn't do the next 25% rate cut." And I think the odds dropped from like 75% to like 65%, something like that. And so that's like, wait, I thought you were cutting to stimulate, and now you think you shouldn't do that. And what is going on here? Why are we getting this hot and cold? How are we getting problems in the treasury market, but the stock market at all-time highs? How are you saying a month ago that you want to increase liquidity and that the jobs are okay, but then we're seeing weaknesses in the actual like physical economy? Jobs are up, but number of jobs per person is up as well. It's like you have all this information that's like contradictory, and I can't tell if it's we're being fooled by the good data and things are bad, or vice versa, or if it's good for some people and bad for other people, and we get this like bifurcation, this K-shaped economy. I don't know what's going on, but it is making me nervous.
Agreed. I think they're
here, right? Sorry.
Yeah, I was just going to say the current expectation, at least from the futures market, is that there's still about a 90% chance that we'll see another 25 basis point cut on November 7th.
Okay.
That said, you can kind of see as we get through the historical chart here how those probabilities have changed, and it's right up until the first week that we actually saw a lift here to almost that 90% mark. Interestingly, though, I mean the futures market tends to be pretty spot on in terms of its predictions for rate cuts, but their accuracy is closer to the actual date. So give it, I'd say, another 3 weeks, and then check the CME FedWatch tool, and you'll have a different story to rely on.
I see. Well, I just wanted to read these just to finish it off. I wanted to read a couple of these tweets that were talking about what we're seeing in the treasury market. I thought it might be interesting. 1 second here. Because I get all my information from Twitter. So here we have Convexity Maven, who is Harley Bassman, he's the one who created the move index. And he says here, bond market worries of post-election panic. The MOVE index measures the implied volatility of a constant 1-month bond option. On Monday, the election fell into this 30-day window. So this jumped the MOVE from 100 to 124. The market is bracing for an 18 basis point rate change on the days after the election. Similar equity options jumped up by 20% and so on and so forth. So essentially, the election here seems to be a big kicker that now that it's actually being factored into the volatility surface, there might be more that happens after the election than what we're normally used to. Here, Jim Bianco, who was considered to be, I believe, part of the to be one of the presidents of the Fed, if I'm not mistaken, the MOVE index is again back into rarefied air, more than one standard deviation about its long-term average, about above the shaded area. Take this as a sign that, again, the bond market is under a lot of stress. And then finally, this tweet from Cross Border Capital: jump in the MOVE, not a great sign. Expect policy actions to rein it back. But is this finally saying that there is too much funding at shorter end of term structure? Hashtag monetization. So when I hear people that I respect start, worrying about what's going on in the bond market, that's where I know, okay, generally it's a long-term thing before it plays out, but it's something to pay attention to. But with the S&P at new all-time highs, I think what we were talking about last week from Kevin Carson, that we might expect a Santa Claus rally into the end of the year, and then basically market up, vol up until we get to end of January, between January and March. That could be in the cards. So as we're wrapping up here, I would love to jump to a Bitcoin chart, because that's a great indicator for risk, great indicator for liquidity, to get a sense of what you think we are, if we've bottomed, if we're sideways, or if we're right about to rip roar. Do you have any opinions specifically on the state of Bitcoin?
This descending trend we've had for some time now. We keep testing. Well, for a while there, it was continued lower highs. Then we touched what I thought was going to be a new high, and then retraced quite a bit. So right now, I'm not quite sure. I want to see us clear this overall downward trend. And I've had this on my chart for some time now. This trend we've been in now, what are we going on? 222 days. It's just been this long consolidation window that keeps me concerned about it going either direction. And I think what I'm going to be looking for is obviously another break above the 66.7 level, and then hopefully a second break against 70,000. I think those are some key levels that would help define this trend overall. In general, you know me, I like to wait for confirmation.
That's right. Well, for me, the thing I was paying the most attention to is to the dollar. And so what we have here, let me actually pull up that chart. 1 second. So to me, it's all about the dollar. And what we had recently was that the dollar bounced off. If you remember a couple of weeks ago, we were talking about it, how the idea was that the dollar would come down here, bounce around in this area before then falling further lower, right? That was like the idea that I was floating around, and that's exactly what we got. We got the dollar bouncing off the seasonal average right over here, right where you have this major strength that you always have that around these areas, and then it bounced straight off of there, and now it reached the top. This is the weekly trend, and if this holds, and this is the lower high, then we're headed down. And if we head down, then I expect that's what fuels the up in equities, and that's what fuels the up in Bitcoin, which to me is a little bit confirmed with what we're seeing right now. That maybe it's wishful thinking, but I'm seeing in the Bitcoin, we had this move up over here where the candle for today responded pretty strongly to, I forget what this average here is, to the seasonal average. Like it is responding here. Whereas before, we didn't get a move up like this off this range. We got it got rejected. It actually here we did move up. So we have to get above. If we get above here, which is the trend, 67,000.
66.7. Yep.
Yeah.
That was the first one I mentioned.
Right, exactly. That to me would be like, okay, we are moving upwards, but as you know me, I like buying right down here. So I started accumulating.
Place your
already.
bets. So
Exactly.
tell me you bought before today's candle then.
I did. I bought at the low of the candle from yesterday.
Well done.
Yeah, that's exactly where it is. So my new prop firm account is in the green, and as well as my my crypto account.
Who did you do that prop firm account with?
FTMO.
FTMO.
Yeah, as a Canadian, I'm limited to this sort of thing.
Yep.
Excellent. So that's what I think, and I think the 6100 on S&P could very well occur because I'm not really seeing anything. There's a bunch of like gamma here at 57, this area. So if we break down over there, there is enough dealer positioning that would cause the price to dramatically fall. But barring us that happening, some sort of catalyst that makes it so that we get down to we close below the 57 level, then I see blue skies.
Let's go.
Excellent. All right, so that's it for this week. As always, it's a pleasure to go over the weekly headlines. I'm looking forward to
Now for
not Tesla news next week. Sorry, just click on the wrong button. I'm looking forward to other than Tesla news next week, but somehow
Right.
I believe it'll be still AI focused.
Oh, always. Yeah. Those are headlines for the next several months for sure.
Nvidia is still making its trek upwards. So maybe we'll touch it next week and we'll see it at some painfully high number that I can never buy.
Sounds good to me. Obviously, I'm still in my position with Nvidia. It's making up a big portion of my portfolio now, so I'm happy.
That's 20. Right, you're in it.
Oh yeah, yeah. I took a big position on it. I averaged. Well, I did what you normally do. Actually, I started to buy on the way down. To the point, I guess I was a little meme stocky with Nvidia, and it is most certainly overvalued from a fundamental perspective. But this is the one.
Don't jinx it. Don't jinx it.
This is the one growth trend I just couldn't ignore. There's really only two plays in AI right now. It's Nvidia and Microsoft. What else are you going to buy? I mean, SMCI, sure. I mean, that was a big one. And I don't know if you saw the move on SMCI,
No.
Super Micro. They're a smaller cap company, but they recently did a fairly large order of GPUs that are contributing to the AI space. So it's not really giving Nvidia for a run for its money, but certainly posting some numbers here that are pretty impressive for its company. And that's another potential smaller play that could have some upside. But I couldn't ignore the Nvidia run.
Excellent. All right. So thank you, everyone. And we'll be back next week.